shares have beaten down pandemic darlings while the rest of Wall Street contemplates their prospects. And the earnings season so far has been punishing to some of her biggest holdings, like Roku today, down 23%. Joining us now, ARK Invest Cathie Wood. Cathie, thank you so much for spending your time with us on a Friday evening. Now, is there anything so far in the earnings season or the economic data, anything else that would make you waver in your conviction of the growth trade?
Well, what we do see in these earnings results is that we are in a recession. And we've been calling for a recession for quite some time, a lot of it based on excess inventory. So we think this is an inventory-led recession. And I think that's coming through loud and clear. We're seeing advertisers cut back dramatically. It seems like when Walmart and Target announced in May that they were loaded up with inventories, and this was far above what they had expected, and that they were going to have to do something about it. You know, a lot of advertisers started cutting back, cutting budget, saying, okay, this is a possible recession indicator. And as you know, we've just gotten 2 consecutive quarters of negative real GDP growth, but a lot of people still are fighting the notion that we're in a recession.
Yeah, certain people are fighting that notion. A lot of economists like yourself, there is a technical recession, but then there's also what a lot of folks, including Fed Chair Jay Powell, says isn't necessarily recession. They define it as a broad-based slowdown across a number of industries. Are you seeing that?
Yeah, I think this is a recession. And I think what the Fed is really focused on is employment as a gauge. Employment is a lagging indicator. The CPI, the PPI, all of those are lagging indicators. If you look at initial unemployment insurance claims, they're up 50% from the low. So I do believe we're going to see some significant disappointment in the employment numbers moving ahead. And I also think, based on what we're seeing from gold, the gold price actually peaked in August of 2020. Many people don't know that. And it's down near the low end of a range, a 2-year range. That's an important inflation gauge. And then copper price. The copper price broke down. It broke a 1-year trading range in the $4 to $5 per pound range. And it has come down hard. So I think all of these are signals that that inflation is going to come down. It's going to come down significantly, and that we're probably going to see some deflation. And we've been calling for that for quite some time as well.
Right, I know you have. And how do you position your portfolio in a recession? What has changed about the way that you're looking at growth stocks?
Well, typically, growth stocks will outperform as we move towards the end of a bear market and an end of a recession, because they're the new leadership. As inflation and interest rates were going up, we were facing incredible headwinds. That started in February of 21. And it looks like, at least so far, that we bottomed on an intraday basis based on our flagship strategy on May 12th. And we actually bottomed before the NASDAQ and the S&P did. The S&P broke down to new lows after that. So that was an early signal that we might be turning the corner here. But I think to really turn the corner, the Fed does need to change its spots. It's getting all kinds of signals that it should, like an inverted yield curve. And yet, I think it's paying attention to lagging indicators of inflation, determined not to be blamed for letting the genie out of the bottle and causing another 70s-like inflation period.
So, Cathie, let me get this straight. You think that we've hit a bottom, deflation is now the concern, and you think that the Fed is going to shift its policy, relax its policy going forward over the next year or so?
I do think within the next year that the Fed will relax its policy, because I think it will prove to be very successful, maybe too successful. The recession may be sustained if it continues to raise rates and the yield curve continues to invert.
Yeah, what do you make of bond yields then? What is that telling you about a recession or not?
Yeah, isn't it interesting? The 10-year Treasury bond yield broke 2.7 today. Now, a lot of technicians were looking at 2.7. That's the lower end of the range. It broke. It's at 265. What is the 10-year Treasury bond yield telling us? 265 for 10 years. That's kind of where people think nominal GDP growth will be. Well, if it's 2.65%, that doesn't leave much room for inflation or growth. So I think the bond market is basically saying, okay, Fed, what you've done has worked. And the surprise is at some point, again, the CPI lagging indicator, the surprises are going to be on the low side of expectations. You have copper prices down 20% month over month and year over year. That is going to get into these price indicators at some point.
So, Cathie, I know you talk a lot about this new leadership. You're obviously making a big bet on disruptive technologies. Some people, though, think that we're in another 2000s dot-com bubble moment, that this is only a bear market rally. And a lot of folks like to use, a lot of the bulls, including yourself, like to use the example of Amazon, right? This is a company that went down hugely during the crisis, the dot-com crisis, and went back up. But for every Amazon, there are many more Cisco's. A stock that is still hugely important, but never regained that peak, even though its revenues may have doubled, for example. Akamai is another example, even more extreme. So how are you positioning your portfolio in terms of that? Because the way you talk makes it seem like you think that there's going to be many Amazons, and there was only one.
Well, we think that there are going to be many Amazons. We've done a study, first two points here. We've done a study on the tech and telecom bubble and bust, and where if we were today at the same point in the downturn, we would be looking at negative revenue growth for our companies. Instead, we on balance, on average, we're looking for north, and it's not even our estimates that we're using here. The consensus estimates associated with the companies in our portfolios suggest that revenue growth will be 25% or more. Now, our expectations are higher. That's a lot different than in the tech and telecom bust, when one company after another was going bankrupt. And that's because global public town square, we need this, and we need an uncensored or a much less censored version of it. And I don't think he will be running it. I think he will surround himself with the right people if he goes ahead and, let's say, negotiates the price down. So I think it will be good news if he's running it. I think the new CEO,
even if he doesn't want it, even if he's fighting it, it's good news if he ultimately has to take it.
Well, if he has to take it, I think he'll do something very interesting with it. And I'm very interested to learn what is he fearing in terms of bots. How much of the activity is bot related? I can tell you just from what happens with my own account. I'll put a tweet out, and within seconds there are 100 retweets. Okay, those aren't people; those are bots. So it would be very interesting to surface that and clean that up as well. It'll make it a more robust platform. I can tell you, it has done wonders for our business. Yeah. And it has done wonders for Elon. He's never had to spend $1 on advertising. In fact, that's right. All publicity is good publicity, and
he certainly knows how to use that.
Yes.
Finally, while we still have time, I do just want to ask you one more thing. You focus on disruptive technologies, the new leadership, as you call it. Meta is making this big shift to what it calls the next disruptive technology, the metaverse. I know that your fund holds shares of Roblox. Why not Meta, or are you looking at it?
So again, we are very. You said earlier, and I agreed with it. A lot of companies were the right companies for the last decade or so, but they're not the right companies for the next decade. I think the jury's out with Meta. I think TikTok has been a huge threat to it and is hitting it hard. And that's their base business. That's their base business. This will be transformational if they're able to move into the metaverse, however one defines that. And I think it's going to evolve how we define it over time. So I'm not so sure they're going to make an elegant transition to it. And that's why we don't own it. We want to be in more of the pure plays, focusing on how the world's going to work, not those companies that have enjoyed a very nice run and are large parts of major indexes because of what has happened historically. We are much more interested in the future winners, not the past winners.
Right, but the earnings season we just came out of, Cathie, tells us that the past winners, the biggest companies, continue to win almost at the expense of the other ones.
I don't think that's true. I don't think that's true. If you're talking about Amazon, just looking at
Microsoft, Alphabet, Apple, they were so much better off than the other names that are being hurt so much more by this economic slowdown.
Right. And so for some advertisers, tried and true is where they're going to be and stay during a recession. I get that. Scatter market is where Roku has been primarily. They're going to get hurt with an advertising downturn. We've got a 5-year investment time horizon. And we think this shift to connected TV, which Roku is leading as a platform, is going to be powerful and surprisingly good. And we think the growth rates, we have a Roku model out there. It's on GitHub for any of your viewers to see, and accompanied by a blog and a video, which we try and explain because we think a lot of the new stocks are misunderstood, and they're misunderstood because they're not in benchmarks. So many traditional analysts don't choose to follow them or feel like they have to follow them. So we're trying to do a little bit of a service here and provide the model. And we ask anyone to go out and test it, scenario test our analysis.
And true to your word, you're spending your Friday evening with us. So, Cathie, we thank you. We covered a lot of ground, from the recession to Fed policy to individual names to big tech. Thank you so much. Talk to you again soon.
Thank you.